Hello, this is Matt on the Moon Lambo channel. The banks are fighting back. Take a look at this headline from the Crypto Basic. Circle and Ripple Bank charter bids face pushback from finance industry. And this is really something here. I gotta tell you, it really burns my biscuits. Why? Because as it turns out, and I'll show you as we go through this video, this latest Moon Lambo Hot to Jam, there's no shortage of major banks that are seeking to get into the world of crypto. In fact, it's pretty much all of them. Seriously. No, really, it really is. But on the flip side, these banks, these participants in what would be considered traditional finance, they're already in traditional finance. They want to pull the ladder up after themselves, and they want to prevent as many new actors in the space as possible. They do not want the crypto firms to become banks, even though the existing banks in traditional finance do want to jump into crypto. Well, isn't that something? And, I remember talking about this topic years and years ago, not specifically banks pushing back against crypto. I didn't focus on that too much other than blurbing it because obviously it's true that incumbents, if they view crypto as a threat, they will attempt to fight back. In the end, they're going to fail. Crypto is here to stay. It's going to advance, and all sorts of businesses like Ripple that want to operate in the world of traditional finance and this new financial frontier that runs with crypto, they're gonna get what they want in the end. Obviously, technology and what is right shall prevail. But it was very obvious way back in the day. I remember talking about this when I launched my YouTube channel in 2018, and I said, look, what you're going to see as time passes is a blurring of the lines. What counts as traditional finance and what counts as crypto? Well, I think that you're going to see crypto pick up a number of aspects having to do with traditional finance. You're going to see traditional finance delve into crypto. So you're going to have this blurring of the lines of what's what. And especially with the tokenization of assets, does that count as a cryptocurrency? All sorts of things. And all this is actually happening right now. Now, this matters specifically to XRP holders because the better Ripple does, actually, and this is just a piece, I'm not pretending like the price of XRP is 100% dependent upon Ripple. In fact, data would indicate that it's actually not particularly, but still this would be good for the overall ecosystem. If Ripple gets what they want, that will prop up RLUSD, makes it more likely to be a long-term viable stablecoin. That, in turn, absolutely is good for XRP, and thus XRP holders. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, so a couple quick reminders. I want to make sure we got the table set here so that we're all on the same page. It's crucial that you understand what I'm going to share with you here before jumping into the latest news, or else without that context, it's not going to be as impactful and it's not all necessarily going to make sense. Here's a headline from Reuters. Ripple applies for U.S. national bank charter as crypto eyes next frontier. So that's from July 2nd of this year, just weeks ago. And this is big news when this broke, and I excitedly shared this on my channel. Ripple's literally seeking to be a bank. They're seeking for to be a national bank, actual bank charter, and they're applying for a Fed master account. Now, the reason that is most exciting is because if that's approved ultimately, that means that the Fed, that's right, the Federal Reserve, could hold RLUSD as a third-party custodian on behalf of Ripple. And so there are a number of reasons that's beneficial, including just for trust. If it's separate from the company that you're doing business with. There are a number of perks. That's one of them. But the Fed could literally hold RLUSD. And why does that matter for XRP holders? Well, of course, any transaction of RLUSD that's done on the XRP ledger by code, I'm talking blockchain code, it literally requires XRP. In fact, every single transaction of the stablecoin RLUSD that's on the XRP ledger requires a minimal amount of XRP be burnt effectively as a gas token. That's how it behaves in that function. So that's fantastic. And just the idea of the federal government holding RLUSD, which requires XRP if it's on the XRP ledger, to me, I was like, that's incredibly exciting. Talk about yet another major thing that can help to ensure the long-term viability of XRP and the XRP ledger. That would be a big one. It absolutely would. And then we got this news. This is from July 9th. It's from CNBC. BNY Mellon will have custody of Ripple's new stablecoin as institutional interest in crypto swells. This is also a huge story. BNY Mellon, they're the oldest bank in the United States, and they're also the bank with the most financial assets under custody on the entire planet. Here's their actual website, and you can see they cite here that they have $55.8 trillion in assets under custody. That's a ton. That's an actual ton right there. They are a huge. And so the reason that this is big is because it just lends credibility, well, certainly to Ripple, but also to everything they're touching, including RLUSD and XRP and the XRP ledger. So this is something that materially matters, and BNY Mellon, they'd not be doing this if they didn't have, if they weren't completely confident that there's a regulatory clarity to make it reasonable to do so, as well as Ripple actually just being a reputable business partner and thinking that there's a future for all of this. So this is a major vote of confidence, major. And it's only going to make additional banks be more confident and jump into the space as time passes. But of course, traditional finance, the old banks, those stodgy mofos, they are pushing back, even though they're jumping into crypto because they're freaking hypocrites, effectively. They know what they're doing. They know it. This is a strategy. This is absolutely a strategy. So take a look at this. Again, the title here, Circle and Ripple bank charter bids face pushback from finance industry. No way. Leading banking trade groups have requested that the U.S. banking regulator delay decisions on federal bank charters for crypto firms, such as Circle and Ripple. A coalition of major banking and credit union associations, led by the American Bankers Association, has formally requested that the Office of the Comptroller of the Currency, or OCC for short, pause its evaluation of national bank license applications submitted by crypto-native firms, including Circle and Ripple. That's right, folks. These old stodgy banks and these banking associations, they are trying to prevent and at least slow down Circle and Ripple specifically from moving forward, because those are the two big names in the throw of things at the moment. That is absolutely what they're trying to do. Anyway, in a letter sent Thursday, the groups argued that approving such applications could mark a significant departure from current federal policy. It cited insufficient public transparency and legal ambiguities around crypto companies' proposed operations. Quote, there are serious legal and policy uncertainties about whether the applicant's business plans align with fiduciary standards traditionally upheld by national trust banks. End quote. And so they write this as though any firm that's applying for an actual bank charter, they're writing this as though suddenly the standards won't apply to Ripple, as if they're going to get by. Well, we're just not really sure. What about the fiduciary standards traditionally? Blah, 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 blah. Except for, again, they never put forth an argument. And this is what really steams my vegetables. They make the claim, but then they never make the argument to back the claim. They're not like, here specifically is what would make it so that these new firms specifically could do things that traditional finance, not so much. Nothing along those lines whatsoever. They make an assertion. It's just out there, hanging out there in the ether. It's an assertion, and then nothing to back it. There is no argument there. There's no evidence to prove that the assertion is true. I have not seen any. I've looked up as much as I possibly can on this stuff. And if you find something, I mean, it's a possibility. I mean, like, there's a possibility I missed something. I'll happy to talk about it in a future video if somebody can point it out to me. I'm not seeing it, though. Where is the proof that the standards to get a bank charter are going to be different for Ripple than any of these old stodgy banks? Show me. Show me where that's the case. They're just trying to slow them down, bro. Piece continues. The organizations highlighted that services like crypto custody, central to Circle and Ripple's offerings, do not constitute fiduciary activities. Now, folks, that's funny. Let me ask you, if any firm, a bank or Ripple or the Federal Reserve, I don't care who it is, if they're holding your crypto assets, do you think that, just answer it for yourself, would you consider any firm that holds your crypto assets, it could be exchange, anything, do they have a fiduciary responsibility to you? Do you believe so? Or none at all? They can just do whatever the hell they want. Doesn't matter what you think or want or what would be ethical, anything of the sort. They just do whatever they want. What do you think? This is completely ridiculous. And I'll show you why it's even more ridiculous in just a minute, but let me do things in order here. So they say, granting such firms federal charters without a public comment period, they argue would bypass decades of regulatory norms. Well, what the hell kind of argument is that? So even if there is, and frankly, I just think that this is a stupid side comment because it doesn't get to anything anyway. Whether there is or isn't doesn't change the material facts of any potential risks. So if it's a norm to have a long public comment period or whatever it is, fine, I don't give a damn. But that's not even the thrust of their argument. The thrust of their argument is an assertion that isn't backed by anything material. That's the problem. Anyway, if granted, these charters would enable crypto companies to operate nationwide under a single regulatory framework. This would eliminate the requirement for state-by-state money transmission licenses. Critics fear this could erode existing safeguards. They also worry it might open the door for non-traditional financial firms to offer services such as payments and custody with fewer capital constraints. And folks, there you go. They're afraid of increased competition. It's not about standards changing. It's not actually, because I haven't seen any proof of that. Eroding existing safeguards? Where? If you have a bank charter, you have a bank charter, and there are guidelines that you must follow. What are you even talking about? What they're actually talking about is new firms coming in that might not traditionally seek such charters, getting them, and then there's more competition. Absolutely, this is to block out competition. 100%, my friends. So they said, quote, this change could pose material risks to the U.S. financial system, end quote, the letter said. Oh, I bet it will. I bet it will. It's going to ruin the financial system. No, shut the hell up. I don't believe that they believe what they are saying. I do not believe that they believe it. Absolutely not. Because it does not make sense. It does not make sense. Custodio Bank founder Caitlin Long weighed in on the controversy via X. She called the banking group's pushback an interesting reaction. Caitlin suggested that if trust charters offer lower regulatory hurdles, traditional banks may consider converting to similar models. This shift could help them reduce compliance costs. Now, think about that. Now, obviously, this is just an assertion, but even if it were true, lower regulatory hurdles, if that were the case, then wouldn't the banks just compete in that world anyway? And again, look, there's no evidence that they have put forth to indicate that this is actually a risk to any U.S. citizen. Financially, there's been nothing actually put forth. They say things with their stupid little face holes, and they type things with their fat little fingers, but they're not making actual arguments here because there aren't any. They're just not that I've seen. Again, you find something, I'll address it. And so here there was in a separate article from Yahoo Finance, somebody named Paige Paradon, co-head of regulatory affairs with the lobbying group Bank Policy Institute, said the following. Banks don't oppose competition. They oppose a regulatory double standard that imposes more lenient regulations on a small group of market participants engaged in the same activities as a bank, end quote. Oh, is that right? You're telling me that the small guy comes in and there's no way that you can possibly compete with that. It's a double standard, right? There's nothing you can do. Get the hell out of here. This is just completely absurd. And to make this even more ridiculous, look at this post from Cryptos R Us. They shared this video on CNBC. It's the Kraken CEO, cryptocurrency exchange, and he said, quote, I've personally met with nearly every exec team at the major banks and brokers, end quote. They all have teams prepping to bring crypto to their customers. That's right, folks. All of the major banks, pretty much all of them, they're planning to bring crypto to their customers. These major banks are absolutely jumping into our world, but they don't want anyone from our world jumping into traditional finance. Well, how about that? Isn't that special? Might it be to protect themselves as long as they can? You know, to kind of do, it's basically like it's the walled garden thing, trying to protect the little ivory tower that they've crafted. And so to do that, just tear down everything else that tries to do things that frankly would be better for U.S. consumers. Isn't that funny how that works? Here's a post from Tyler Winklevoss. He's one of the Winklevi twins. Of course, that's the plural form of Winklevoss. And founder of cryptocurrency exchange Gemini. He said, check this out. This is just ridiculous. And this is another thing that they're doing. This is just freaking traditional finance. Damn it. This is why we cannot have nice things. This is why we cannot have nice things. Anyway, he wrote the following. JP Morgan and the banksters are trying to kill fintech and crypto companies. They want to take away your right to access your banking data for free via third-party apps like Plaid, and instead charge you and fintechs exorbitant fees to access your data. And folks, let's pause there. Have you ever tried to link up in your checking account in the United States with with a cryptocurrency exchange, typically what you're using is a third party like Plaid. And so what they're trying to do is get rid of that so that it's less convenient and more expensive, and you have to go through the legacy system. Do you see what they're doing here? They're trying to limit innovation because they don't want to compete with it. Not like that. So they'll come into our world to try and compete, but anytime there's anything that might take away any tiny ounce of their market share, they're like, nope, we're going to fight that. Do you see what they're doing? Anyway, Tyler continues. This will bankrupt fintechs that help you link your bank accounts to crypto companies like Gemini, Coinbase, and Kraken so you can easily fund your account with fiat to buy Bitcoin and crypto. As of today, the open banking rule developed pursuant to Section 1033 of the Consumer Financial Protection Act gives you the right to access your banking data via third-party apps. So that'd be like Plaid, for example, which is what pretty much everybody's using, at least in the United States. I don't know how widespread it is in other regions, so on and so forth. I just don't have that information. But it's very widespread here in the United States, and they just don't want you to be able to do that. Because reasons, folks. Because reasons. Anyway, the banksters are suing the CFPB to vacate the open banking rule and end the open banking era. This is the kind of egregious regulatory capture that kills innovation, hurts the American consumer, and is bad for America. Jamie Dimon and his cronies are trying to undercut President Trump's mandate to make America the pro-innovation and the crypto capital of the world. We must fight back. Gets a little golf clap for that. Spot on, Tyler of the Winklevi twins. So, you guys tell me what you think, but I'm thinking that these banks, they are purely trying to protect themselves. They know the arguments they're making are not logically consistent. It doesn't make sense. But the good news is, and at least as I view it, is it's a virtual certainty that they're going to lose. Absolutely. All right, I'll go ahead and wrap up here. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.